Okay, everybody. Hello, how are you, everyone? Just before we start, quick sound check. Could you please confirm in the chat box that you hear my screen? That would be great. So that way I know we are all well connected so we can begin. So if you could just type a quick yes or okay or hello on the chat box, it would be very, very good. Just gonna wait a second here. I'm receiving a few of your messages as well. Okay. Good, perfect. Okay, everyone. So let's begin. Let's begin. Just 1 second here. One extra second, please. Okay, so ready to go. Fully ready to go. So let's begin the day. Today is January 6th. Today is going to be a sharpening session. So today we're going to be talking about two key, very important components in trading, which I will mention in just a second. Before we start, quick disclaimer. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradective provide these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. Little more of housekeeping. Very quick. I can see many of you have been with us before, so what I'm about to explain now, you probably know it already, but for the users that you are joining us and you are still new to the UFOs, here's our main website. It's tradewithufos.com. Okay, let me paste on your screen the URL, so that way you guys can connect with it. Here we go. So I'm going to have it on the stream. Good. Perfect. And so the reason for me to be pointing at this website, which is our website, it's actually I have multiple reasons. Reason number one, get together. On the upper left, you can see the get together button. If you click on it, you get a list of the sessions that we are running as we speak. So you can see today, January 6th, we are meeting at 10 a.m. US Eastern Time. We are always using as a reference the time zone of New York, if you wish, which is where we have the biggest exchanges and markets in the world. So we are looking at that time zone. Of course, everybody is in a different time zone. So when you look at these times, make sure you do the conversion to your own time zone, okay? So sharpening today, the following week we'll have short-term and long-term, the next week short-term and long-term, etc., etc. Back to sharpening on the 27th. So we'll be combining sharpening sessions together with trading days where we normally will conduct those sessions either while the market is open or about to happen. So whatever we learn, whatever we apply when it comes to the use of our app, hopefully you'll be able to also apply it. It's real time, okay? And you will be the one deciding if you plan to use real capital or paper money, or you just want to watch from the sidelines, okay? That's gonna be your decision. Obviously, our intention, as you know, Tradective, we are traders, so our intention is to do things that are actually actionable, okay? So just keep that in mind at all times. Second, quick reminder, our Facebook page. So why is that? We communicate through Facebook many times, okay? And that's important because many times we communicate certain things through Facebook or social media in general, even before that one when we send emails to our users, okay? If you are not a Facebook fan, you may use LinkedIn. So same story, okay? We have a LinkedIn page where we have a lot of information related to not only our company, but also announcements that could be key for you, or also trade examples, okay? Trade examples that you can also find. I'm going back to our website. You can also find in our samples section inside our website. Down, there is a collection of trade examples that are loading as we speak in this page, where you can see users executing trades apart from other announcements. Okay, so all those trade examples, you will probably have an easier time looking at them in LinkedIn or Facebook. Okay, they are also in Instagram and also in the TradeStation webpage. So TradeStation has a webpage apart from the main public webpage of TradeStation. TradeStation also has a webpage which is what they call the Trading App Store. So I am adding this on the screen as we speak. How are you, Simone? A pleasure to see you here, and David as well. So the TradeStation App Store with TradeStation is the place where you get the UFOs. So if you ever want the UFOs in your TradeStation, you just type UFOs, you click on the green button, okay, while you are in the TradeStation Trading App Store, and then here's the link. So now you just click on the free trial, and therefore you have access for free to the trial, or you subscribe, and that's how you get the tool in your computer, for as long as you choose. Okay, it's $89 a month, as you probably all know. Okay, so little reminders which are important because sometimes some of you, especially if you are new to these sessions, you may join us. And you may have seen the tool, but we'll receive questions of this sort all the time. So it's always a good beginning. It's a healthy beginning to give you those answers even before you ask. Okay. Cool. So let's begin our day. So today we have a sharpening session in front of us. And what does that mean? Well, it means that we're gonna have to talk about market theory. We're going to have to talk about million different things that have to do with trading that you need to understand in order to be able to trade. And this applies to whatever you do in trading, meaning that it doesn't matter if you use the AutoUFOs app or you don't use the AutoUFOs app. The things that we're going to discuss in today's session are relevant for traders no matter how you enter and exit the market. Okay, the AutoUFOs app, of course, it's a great app that gives you a series of benefits. You save time, you remove the human component, you become more mechanical and objective. So you have a collection of benefits of using the app, which I'm not gonna get into details today because it's not the subject for today. Okay, but what I'm gonna talk about today are things that a trader needs to understand to be able to trade, to trade properly. Okay, and then you choose if you want to add the app to your life or you don't want to add the app to the way on how you trade. Okay, good. So, what's the first question I would like to address here? Okay, and this is again coming from the feedback that we get from our users, comments, emails that you send to us, etc., etc. Okay, so today we're gonna address two subjects. We're going to be discussing two important things, which, based on your communication with us guys, those are the two things that you guys seem to be needing the most when it comes to discussing it, or maybe we have identified certain level of confusion in certain places, or certain level of subjectivity in other places, and we want to help you to remove all of that. Okay, so the subject number one for today will be trend. Today we're going to talk about the trend, what it is, what is not, how to use it, how not to use it, how to rely on it, how to not rely on it, when to rely on it, when not to rely on it. So trend. We would like today to talk about trend from all different angles. So hopefully at the end of the session, no one is confused or has any question about trend and how to use it as a trader. Okay. So that's a pretty major topic, okay, and we're gonna talk about it, as I said, from different angles. The second subject for today, we discussed it already in prior sessions, but it is obvious to us based on your questions that you need more reinforcement. So we'll discuss a second subject for today. We're gonna be talking about the calibration settings for the AutoUFOs. Okay, for you to use the UFOs, you have to calibrate. The application comes by default with a parameter of 0.5, as probably most of you know. You could certainly use 0.5, but it's recommended to calibrate. So how to run a proper calibration is what we will discuss as well today. And those are the two objectives that we have for today's sharpening session. Okay, guys? In the meantime, feel free to go ahead and anytime you have a question, just post it. Okay, so we'll get your question and we'll be able to give you real-time answers and so on. Okay, so make sure that you're not going to be quiet or anything like that. You're going to be dynamically collaborating with us. Okay, so let's begin with the trend. Okay, and here is the biggest problem I have identified myself when I started learning how to trade myself, or when I talk to people that are traders or learning how to trade, and every time we talk about trend. Okay, and the problem, the biggest problem, which in my mind is the origin for the confusion, is that when a trader tries to understand the trend and what is it and how to use it and why it helps you, what it helps me, or why it doesn't help me, most of the times the trader trying to understand trend is thinking about it like trend is a universal truth. And that's the issue. That's the origin of the issue. Okay, we need to remember at all times that trading is a probability game. And therefore, any definition for any tool that you may use in your trading is subject to the laws of probabilities. In other words, a market condition that looks like a trending condition, for example, doesn't mean that the trend is always going to be relevant or non-relevant. It will mean that in a series of conditions based on probabilities, that trend may react in certain ways or may react in other ways, and therefore it's all about probabilities. Let me stop, pause, rewind, and start again, because in one hand, what I've said is not magic, is nothing new, but probably, again, we have a diverse group in here. Therefore, some of you have a lot of experience trading. Some of you may have less experience trading. Well, if you have some experience trading, I think that, and from this on the chat box, but I think that if I was to ask this question, which is the mindset important when you trade? Is the emotions of being human, are the emotions of being human something that plays a big part in the game of a trader? What would you guys say, right? And you will answer that question. But even before you answer, I'm sure we all agree 100%, which is that emotions are a big part of the game. Nothing new. But this applies to trend. Why? Because the problem I have seen many times is are looking for a methodology on how to trade, where they decide to trade in the direction of the trend, or they decide to trade against the trend, or whatever they do with the trend. The way traders tend to think about that concept is many, many times like it's a universal truth. And therefore, that's problematic, because even though you may have the most beautiful, most defined trend in the world, that trend could change, and then the trend didn't help you any longer Therefore, it was all a matter of probabilities that the trend was going to do what the trend was supposed to do. Okay, so let me explain what a trend is, but keep in mind that the reason why we're talking about trend today, apart from helping to clarify certain questions, is because the trend, if used properly, could act as an ally in a trading methodology, but an ally doesn't mean it's gonna work every time the same way, or it's gonna work every time at the same level of reliability. There will be times where it works better, there will be times where it works less well. Okay, and this is something for us traders to keep in mind all the time, because if you were to get too strong or too opinionated about what the trend does to your trading methodology, the problem is that if you were to have a market condition which is very choppy, where the trend is not consistent, the trend keeps changing, going from up to down or sideways, then there would be a moment in time where basically you would end up disappointed by the results of your trading, and this would have a mindset impact, which is what I'm trying to avoid here, which is now you would lose confidence on your trading ability or your trading methodology. And it's just because when you looked at trend, you were looking at trend like a universal definition instead of a probability concept. Example, gravity. It's a universal definition. 100% of the times you release a pen, it falls on the floor. Why? Because of gravity. That's a universal truth. Trend is not a universal truth. Trend will provide probabilities. So using the example of the pen, it would mean that if you trade in a certain market condition with a trend in a certain way, well, that would increase the probability of the pen falling on the floor, which is what you expect. But you still have the probability of the pen doing something different. Okay, that doesn't happen with gravity, but it does happen with the trend. Okay, and so again, I'm trying to, if you are not there yet when it comes to your level of skill as a trader, I am trying to open your eyes and help you train your mindset to think in terms of probabilities instead of thinking in terms of universal truth. Because all the knowledge that we have and we acquire as traders is in order for us to exploit it in the form of probabilities, because nothing is a sure thing in the marketplace. Okay, it's all a matter of probabilities. And trend, if used properly, will increase the probabilities, but will never become a universal truth. Okay, could you please give me a quick yes, a quick okay, quick, we're with you, Jose, agree, Jose, whatever you want to type on the chat box, or if you have a different thought, feel free to write it as well. But I would like to make sure that in this first statement, before I get into the technicalities of trend, in this first statement, you guys are with me, and you understand that I'm going to talk about trends from a point of view of probabilities, because that's the useful way to look at trend. Okay, so please give me a little bit of feedback there, so I get to understand your thinking and your mindset as well. Okay, and also remember all those comments that you will be sharing with me on the chat box. I will keep them for myself. Okay, and when a question is a question to be shared or something like that, then I will show it on the stream. Okay, so feel free to interact with me as much as you can, even if you have to, if maybe you have a question that you feel my question is so basic, I don't dare to ask. Remember, I'm not going to share it on the stream, but I will read it, so that way I will be able to give you answers. Okay, everyone. So make sure that we are working all together here as a team. Okay, good. Perfect. Thank you for that. I'm reading your comments right now. Okay, guys, thanks. So anyway, so trend. Okay. Okay. So guys, to talk about trend, the first thing I need you to do is to forget that trend is a word in your vocabulary. Okay, it's the first thing I need you to do. And here's what I'm going to do. I'm going to look at. Well, I got Visa here, so let's look at Visa. And you'll see what I'm going to do. I'm switching the time frame from 60 minutes to monthly, and surprisingly, it's taking a long time to load for whatever reason. So this is Visa in a monthly time frame, okay? And if you think about it, on that particular date, okay, that was the end of October 31st, okay? Let me go back in time to October 31st. If I move to October 31st, 2018, you can see that Visa gave us a red UFO and then a green UFO. Okay? So again, remember, I'm going to talk about trend. Okay? I'm going to talk about trend, but forget the word trend exists. Now, you guys tell me, if Visa was to come back to the red UFO, what would you expect to happen? Well, I think it's pretty clear. We would all expect that the moment Visa reaches the red UFO around this region at 142.41, then Visa will begin a process of falling, reaching the next green UFO, which is 126.27. Okay? So now that we know this, I'm gonna disable UFOs. Okay? And now instead of looking at a monthly time frame, I'm gonna move down to a daily time frame. Let me zoom out a little bit. Daily time frame or even 60-minute time frame. Let's do this, 60-minute time frame. Okay. At the moment in time, depending on how let's use classical definitions of trend. If you look at, highs and lows and stuff like that. So this is a sideways market. Okay. But if Visa reaches 142, it's gonna fall down all the way to the 126, correct? So let's fast forward in time. Let's fast forward in time to current date, right? And here we go. The moment Visa got to the 142, a new downtrend developed going from here to here, right? And when Visa got to the green UFO, now it seems that a new uptrend is developing, to the upside. So in other words, what is the trend? Well, the trend is simply price movement going from a green UFO to a red UFO, or going from a red UFO to a green UFO, that when observed in a lower time frame, in this case 60 minutes, you get to see those classical lower lows, lower lows, lower lows, and lower highs, lower highs, lower highs when it's down, or you have higher lows and higher highs when it's up. Okay, so what is the trend? It's a directional movement of a market, which is the normal consequence of a lot of selling or a lot of buying, and therefore the market goes down or the market goes up based on the amount of buying or selling, which, if I use the vocabulary that we use in our room here, in our get-together sessions, I would, instead of the buying and the selling, I would talk about the buy UFOs and the sell UFOs, right? The green UFOs and the red UFOs, the buy on-field orders and the sell on-field orders. That's what trend is. In other words, trend is not relevant, okay? Trend is not relevant in the sense that no matter what you would expect to happen based on the trend, whatever would happen based on the trend is not really the right way to think about it, because trend is more the consequence than the reason. The trend is the consequence of prices moving from the green UFO to the red UFO, or the red UFO to the green UFO, instead of you expect the market to move in a direction because of the trend. Because if you were to do that, in most cases, you're gonna be late. Okay, especially if the UFOs are too close to each other. Okay, so if I go back to the chart here that we had at the beginning, if I go back to, this was October 13, and I was to look at the monthly time from the way we had a minute ago, and I was to reactivate the UFOs. So what do we have? Well, we have the red UFO and the green UFO are quite near, they are close to each other. Okay, they are close to each other. Okay, so this trend, if you were to rely on the trend, like many schools of thought suggest, the trend is your friend, and therefore when the market is moving up, many traders around the world are trying to buy after the trend is up. Or if the trend is going down, many traders around the world are trying to sell or sell short because the trend is down. Well, that would many times get you late to the party, because for you to know the trend is down, this thing had to drop a lot for you to be able to see it as a downtrend in the lower time frame, the 60-minute time frame, as I was looking at earlier. And therefore, basically, you would be selling very low, very close to the green UFO, and therefore that's when the trend is going to change direction. So you are selling too late. Is that making sense? Other cases in the market would be different. For example, what if you were looking at the market instead of October this year, you were looking at this market August the year before? Well, if you were looking at the market in August 1st, 2017, 1 year before, well, you would see that you got green UFOs, but you have no red UFOs. In other words, there is nothing from stopping that market from going up. And therefore, in this case, you should expect an uptrend that continues and continues and continues and continues. And therefore, relying on the trend and calling the trend is my friend, then in a case like that would make sense. Why? Because there is a lot of room for that market to move. Why? Because the trend is not something that is the reason for you to trade, but the trend is the consequence, the natural consequence of prices bouncing out of green UFOs and reaching the opposing red UFO, or bouncing out the red UFO and bouncing out of the rival green UFO, right? In this case, if you don't have the red UFOs, you only have the greens. So then the trend is likely to last. And now if you were to tell me, I want to trade in the direction of the trend only, I would say it makes sense. Why? Because based on probabilities, remember, it's not a universal truth, but based on probabilities, that market is likely to continue going higher because there is nothing to stop it going higher. There is no red UFO. Is that making sense, everybody? So again, to understand trend, okay, let me pause and rewind and summarize a couple of key things I said. To understand trend, the best thing you can do is forget about trend. And instead of forgetting about trend, think about price movement between UFOs. And what you should be thinking is, if my UFOs are too close from each other, then there is no room for a trend to expand and be formed, and therefore the trend is not going to be your friend. Where if there were to be a lot of room between UFOs, the green UFOs are far away from the red UFOs, or even more extreme, there are red UFOs but no green, or there are green UFOs but no red, right? Or the UFOs are far away from each other, then there is room for the trend to expand, right? And therefore, the trend could be your friend, and maybe it's okay to enter the market a little late, but only if there is room for the trend to expand, because the trend is not important because it's the trend. The trend is the consequence of price movement between UFOs. So if the UFOs are far away from each other, then the trend could be relevant in your trading. But if you were to rely on the trend without knowing where your UFOs are, well, basically you are betting that the trend will continue without knowing if there is room for the trend to continue. Okay? Let me take a look at your questions here, and then I'll come back to what I'm saying, because there is more detail I want to add and examples that I would like to observe with you. Let me go ahead and share one of the messages I have here from Simone. Simone, can you suggest the right setup in TradeStation in order to be able to avoid it to freeze? I have set up at 1,500 per bar as a default, but I think I have the app running in too many workspaces. Should I use it in one? How can I remove the app from? Okay, that's a very good question, Simone. I will address that afterwards if that's how. Focus on the trend conversation, and that would be a little distracting right now, but later when I talk about calibration, actually it would be great to discuss that then. Okay, good one. Fernando says, but you also need to turn the history back to see if back then there were UFOs, right? Not really. Not really, because we don't trade in the past. We trade in the present into the future. So, Fernando, I was going back days in the past to be able to explain the concept. Okay. In a minute, I will talk about how to apply it real time. Okay. Again, going back in time is never, as a generic statement, I will say is never a very good idea, because we don't trade in the past, isn't it? So, but I get your point. I am still halfway into explaining this. Okay, so just give me a second here, and you will see how everything falls into place. So anyway, so concept number one, to understand trend. Let me go back to trend. Concept to understand trend, you need to forget trend. Okay, you don't want to think about trend like everybody thinks about trend. Okay, because you may have read, and sometimes I do that myself actually. When I change my hat from trading mode when I trade versus education mode, which is when, apart from doing what I do, I need to explain what I do. Sometimes, as an educator, it's very common. Many people do it. We look for simple to understand analogies, to make a point, to help traders, students to understand this better. Okay. But sometimes the analogies are a little dangerous, because sometimes they create biases. If the analogy is too good, but is not precise enough, then the analogy creates a bias, which is the wrong bias. Okay, so for example, an analogy you may have heard or read in books is that the trend is like a train, right? And maybe you have heard or read in books that what is easier for you to jump on board of the train? Is it easier for you to put yourself in front of the train and try to stop it yourself and ask the train to move in the opposite direction? Or is it better to jump in the train from a helicopter, right? So, and in that analogy, it's obvious that the jumping on the train from the helicopter is a much better way to join the move, right? And therefore, it creates a little bit of a bias there, where trading in the direction of the train is always going to be better, okay? And it is true that it's going to be higher probability to trade in the direction of the trend, but there is a big if. And the if comes with capital letter if. It is true that jumping on board in a market that is trending will enhance your probability of success only if there is still room for that trend to keep expanding, right? And how do you know that? That's the UFOs. So, because if you didn't know where the trend is about to begin and about to end, and you were to rely on the trend just because it's the trend, well, it's kind of like jumping from the helicopter into the train, but you don't know where the next station is, right? So maybe you are jumping right before the train is about to stop, and reverse, right? So then it doesn't help you. So you need to be sensitive of that point, okay? And then, of course, under very extreme situations, new trends will develop, and by the way, not every UFO will work. Remember when we talked about thinking of in terms of probabilities? Well, guess what? This applies to the trend, but it also applies to the UFOs. So if I tell you the trend is likely to begin here and likely to end there, well, now you know how to take advantage of the trend, because the trend is about to begin here and end there. But I could be wrong with my UFOs, or I could be wrong with the trend, because in the middle of the trend changes direction. Because maybe a new big player in the marketplace came up with a massive amount of on-field orders to either buy or sell, and a new UFO form in the middle of the trend. So again, it's all about probabilities, okay? And of course, if you jump on board in a trending market where there is room for the trend to keep expanding, etc., well, you are adding probabilities in your favor, which is good. This is what traders we should do. But at the same time, we always need to manage the risk as well with our stops and everything, and also the mindset, because there may be times where our UFOs will not work. Why? Because the big player that created the UFO removed the on-field orders, cancel the orders. Like, for example, the market was in a massive uptrend. Most of the unfilled orders were to buy, few of the unfilled orders were to sell. But suddenly, maybe the Fed reported something very, very major. The President of America said something very, very strong. Some major thing is happening in the markets globally. And therefore, the institutions that got buy unfilled orders cancel them. And then not only you have a downtrend, but that downtrend was likely to stop at a certain point. And guess what? It didn't stop at a certain point. It continued. Why? Because the institutions, the big players in the market, removed their unfilled orders to buy. As traders, we always need to think about everything we do in terms of probabilities, okay? And the best is whatever trade that has the greatest amount of probabilities, even though it's never a guarantee. And therefore, we always need to be disciplined enough and manage risks. With stop orders, with derivative, with options, with whatever you want to do as a contingency plan. Okay, and then from a mindset point of view, never fall into being disappointed because the trade was looking like the trade of the year, but then it failed. And if and because you got disappointed, then next thing you know, you stop trading. Is that making sense? So we always need to keep everything in line, the methodology, the probabilities, the mindset, everything. That's how traders become successful, no matter the tools that you use. And this certainly applies to the UFOs, okay? So again, a trend could be an ally in your trading methodology. There is room for the trend to continue expanding. So having a methodology, which is a trend following methodology, which I'm sure many of you utilize because I would say is the most common way to trade, to follow. So having a methodology that is a trend following methodology, it's certainly a very valid way to approach trading. But you also need to ask yourself the next question. How much more room there is for this trend to continue expanding? Because if there is not much more room for this trend to continue expanding, then joining the trend is actually, is going against you instead of helping you. Okay, so that's why I started this section saying to understand trend, forget there is something called trend. The trend is the normal consequence, the natural consequence of having price movement move and progress from a green UFO to a red UFO, or from a red UFO to a green UFO. Okay, and therefore, depending on where the UFOs are, how close they are to each other, or how far they are from each other, then you have a higher probability for the trend to continue expanding or the trend to stop and reverse. So, have a couple of questions that I want to get on the stream and discuss with you. But the moment I answer those questions, what I'm going to do is I'm going to talk about two different ways to plan on entering a trending market or plan on entering a market against the trend. So then I'm going to give you two different applications, two different ways to look at it. And this I will not do it in the past. This I will do it in the present with the current market information. So those potentially could be trades for us to execute as well. Is that making sense, everyone? And that way, hopefully, the concept of the trend will be clear for everybody and you will not get confused, okay? So, but before that, I have a question from John. So John says, these look brilliant. It means there is no human judgment on defining any trend. Well, anything human, and I'm kind of having a smile on my face at the moment. I mean, because there have been times, I'm sure you have heard me say at times, I greet you or I say goodbye, and sometimes I've been calling you guys, my alien trader friends, right? And the reason why sometimes I say alien trader friends is because, we use the UFOs and, aliens, UFOs, all that stuff. So it's kind of funny, but at the same time, the reason why I say it is quite serious, because the less human we are when we trade, the more efficient we are, because there is less subjectivity and less emotions in the game. So judging the trend based on, a human impression it's certainly something you could do. And if you were to be very disciplined, it's valid. But the problem is that it's very difficult to be very disciplined, and especially if you not have been trading for, I don't know, let's say you have been trading for less than 5 years. Well, normally subjectivity kicks in many times because there are many things still that you need to see because it's only 5 years of market experience. So, in a minute, I'll do an application of looking at trend, and you will see how I will remove myself from human in a very simplistic way, add a little bit of probabilities on my favor, be a little less human, and that's it. Very simple. Orlando, so in the presence of only green UFOs, you would go long at CP, not sure what you mean by CP, or wait for a price pullback to demand zone. Yes, exactly. If you more red UFOs, the market is in an uptrend, and there is nothing to stop from continuing expanding, okay? Then you would just bet on, I mean, when I say bet, I mean that the highest probability for your trades would be to trade to the upside. And therefore, you will go long with whatever technique you use. Maybe you do trend line breakouts, maybe you do, maybe you trade sharp patterns, maybe you use demand zones, and you wait for pullbacks or retracements into zones, it's anything. That would make sense in that scenario to rely on the trend. But why? Because the trend has a higher probability of continue expanding. Why? Because there is nothing to stop the trend from continue expanding. Okay, that's the thing. And I see John. John says that I want to be an alien, the best alien I can be. Okay, I think all of us are a little alien here, isn't it, guys? Anyway, thanks for your humor, even though I know you're very serious, John, and I love you to approach it this way. Anyway, so again, 2 applications. Okay, let's do this. 2 applications. Application number 1, I would like to look for a market, measure somehow the trend as an alien, not as a human, so no subjectivity. And once I have done that, then I will look for the market environment with the UFOs to understand if the trend is likely to continue expanding or not. And if that's the case, then I would plan on the trade following the trend, okay, using current price. And then I will do the opposite, okay? So look at the market and think of where is the trend likely to stop, right? And therefore plan on a trade against the direction of the current trend, because that trend will be likely to reverse at that point. So we would then plan on a trade in the opposite direction, okay? And we'll go over the rationale behind both of those scenarios. And hopefully this will help you to understand better trend, okay? And then during our sessions during the weekdays, we can certainly use that in many trades, okay? And it would be great as well that you guys come up with your own plans. And if you want to share your plans with us, we can put it all together, okay? Cool. So, I mean, which market should we start with? Okay, so what about crude oil, for example? Okay, so I'm going to load crude oil, and here, just to have a very, very strong point, I was looking at the monthly time frame a minute ago, and like the concept of trend, I wanted to be very, very graphical, very visual, right? But now, instead of going for such a big time frame, in this case, I'm just loading a very standard time frame, that many traders could use, which is a 60-minute time frame. If you're trading intraday, for example, I could do this. Whatever time frame is not relevant, to be honest. I mean, it's relevant to you as a trader based on how many trades you take per day and things like that. But when it comes to trading techniques or trading concepts, it's not really relevant. Okay. So now, the first thing I want to do in this market, crude oil, it's to assess what's the trend. And there are a million different techniques on how to do that. I mean, if I load the list of analysis techniques, with TradeStation, for example, to do that, look at that. They got hundreds of indicators here, where many of them have to do with trend stuff. Okay, so you got MACDs, you got Bollinger Bands, you got CCIs, you got moving averages, you got DMI, ADX. My God, so many things. Okay, so many things, and there is a lot of theory about it. And you could just document yourself in the internet. There is a lot of stuff out there that will tell you how to measure a trend. And you know what? It's all good stuff. And at the same time, it's all a waste of time. Because no matter how you assess the trend, if you know what's the trend, but you don't know how much room there is for the trend to continue expanding, then that definition of trend is actually problematic. Okay, so my suggestion to you when you look at trend is not to make it too complicated. Don't make it too complicated. Just use one technique, whatever you pick. And the one I'm going to pick for myself here, it's a moving average. That's it. Why am I going to use a moving average? Because let me use a moving average. I'm going to use, the 20, for example. Okay, some of you like Fibonacci, so I'll do 21. So why am I going to use the 21? Simple. Because if the average of the last 21 candles is moving up, and the price of this market is above the average, which means that the average price movement keeps moving higher. So what does that tell you? It tells you the trend is up, right? And if we all use the same moving average with the same settings of 21, it doesn't matter who you are, how much resolution you got on your screen, how many years you have traded before, as long as we all use the same information. If I ask you what's the trend, based on this indicator, everybody would say the trend is up. 100%, everybody would say the trend is up. Why? Because the average is moving up, price is above the average. That's it. Okay, so I just made myself an alien. I'm not thinking. I am not acting as a human person, which may have beliefs or outlooks or forecasts or preferences or biases, and I would like to see crude oil to go up, or I would like to see crude oil go down, or the last trade I took with crude oil was short and it worked well, so now I'm not sure it's going to be an uptrend or not because the last trade I took was down and it worked well, so now I'm undecided to go long, but the fact is that the trend is up. So we stop thinking and we just act based on objective information. So this objective information, from a point of view of probabilities, is telling you the trend is up. And the relevance of this is that the only thing that needs to happen for the trend is up is that there is more buying than selling through time. Because there is more buying than selling through time, it means most people are buying and few people are selling. That's why the trend is up. So if most people are buying and few people are selling, what should you do? You should buy too. Okay, so again, we are jumping from that helicopter into the train. Makes sense, but it only makes sense if there is room for the trend to continue going higher, isn't it? So what do we have here? Well, we have a red UFO right there. So what this is telling you? Well, this is telling you that when the trend reaches this price level, okay, when that market reaches this price level, you may see this market to start going down. And therefore, as a consequence, you may see the average turn and go down. In other words, the room from current price to the light blue line is the room you have for the trend to continue expanding. So would it make sense to join the trend? Yes. Why? Because there is still some room for the market to keep moving higher. Okay. Now, like a doctor, when a doctor does an X-ray to a patient, and maybe they're looking at the shoulder of the patient, that X-ray is never done using one angle only. That normally that X-ray is used by 2 or 3 different angles, so you can see all angles of the shoulder, and therefore the doctor can have a proper diagnosis. Well, as I told you, you don't want to be an over-perfectionist person because that will lead to problems, as you probably know. But at the same time, it may not hurt you to look at a couple more time frames just out of being sure. I mean, if you got 2 red UFOs on the 60-minute time frame, I'm pretty sure in the 4-hour time frame or the daily time frame, some sell on field orders too around 49.65. But instead of just, let's go ahead and switch to 2 more time frame. Let's make it 4 hour and daily, just because they are standard time frames. So I'm going to go for the 4 hour time frame, and the next one is far away. So in this case, it looks like there is room for the trend to expand, even though there was a threat in the 60-minute time frame where this trend may stop, turn, and go back down. Give me a second, guys. It seems that it's, for whatever reason, it's taking a long time to load. So it should be there in just a second. Okay, I'll switch to daily in the meantime. Is that what happened in the daily too? In the daily, we also have, this UFO, right? So this UFO actually, shows us sell on field orders a little lower than that. So you have seen me move the blue line a little lower. So if I go back to my 60-minute time frame, what is that telling me? Well, it's telling me that we are in an uptrend. Trends tend to continue. That's why we call them trends. All of this may be probability. But what's the reality? It seems that the moment that trend reaches 49.26, that trend is probably, likely, going to either stop or reverse. So, you got to be very careful on entering the trend. Okay, so if you had, for example, if you had a green UFO at current price, okay, let's make one up. Okay, let's say there was a green UFO at current price here. I'm just going to try to mimic if there was a UFO at this price level, right? Okay, and you have bought here. Well, that is a trade where you have a high probability profit because you are buying in the direction of the trend, and there is room for this market to reach 49.26. So that is high probability profit. But the problem, okay, and it also depends on how you enter and exit your trades, but if you were to enter here, right? And that is, let's say, 48.30, right? And let's say your stop is located here. Okay, and let's say that is what? That is 47.55. $47.55, right? And then you were to have your target. Oops, sorry, guys. You were to have your target located at 49.26. Let me adjust this properly. If this was your trade, okay, if this was your trade with an entry at 48.30, target at 49.26, and a stop at 47.55, so what would that do to you? Well, you would be likely, quite likely, to make the difference between 49.26 and 48.30. You are very likely to make 96 ticks on crude oil, but for you to make 96 ticks, you would be risking 48.30 to 47.55 is 75. So you are about to make 96 and you're risking 75. This is a 1.2 to 1 trade. Again, everybody in here have different trading plans. Some of you may be happy with this. I personally would not be happy with this. Why? Because you are buying too high in the trend. Yes, it's a trend, but there is too little room for the trend to keep expanding. Okay, now if you don't have the UFOs on the screen, okay, you would not know any of that, and it will give you the impression that this thing is going to the moon. But what's the reality? The reality is that, remember, the trend, forget about the trend, it's not about what the trend is, about the trend is the consequence, right? So trend is simply price movement, the natural price movement going from a UFO to the rival UFO, from red to green or green to red. And, as you just seen a minute ago, we have those UFOs in front of us, and therefore the trend is not likely to continue. So what would you do? What could you do in a case like this? The only way to approach a trade like this is either you pass and you go look for another market, or you go for a lower time frame. So what if I was to look at the 5-minute time frame? Okay, if I was to look at the 5-minute time frame, okay, knowing that it's 49.26, right? Knowing that I got, I'm just going to replace the line because I erased it before, right? But we had earlier when we looked at the 60 and the 4-hour, we saw green UFO at 49.26, right? So knowing that the trend may continue all the way to 49.26, okay, I'm talking about the 60-minute trend, may continue to the 49.26, well, maybe you want to use this green UFO and this green UFO to take the trade, right? And therefore, what would you be doing? Well, you would be entering here, okay, with a stop. You know what? Let me do it differently because I'm just using just want to give you a little bit of colors to be visual. So if you have your entry around 40.25 and your stop around 48.02, since those two UFOs are so near to each other, I'm just going to merge them together, right? So if you were to take this trade, what those UFOs are, assuming that, the market reopens, a few hours from now, and price comes back down to 48.25. So from 25 to 02, you are risking 23 pips. Sorry, 23 ticks, right? And potentially you can get all the way to 49.26. Maybe you are a little more conservative and you want to take profit where this UFO is, right? At 09. So if you take profit at 09, you bought at 48.25, you're going to make 84 ticks, and to make 84 ticks, you're making 23. So that's at 3.61. This trade could make sense. And what are you doing? You are relying on the trend, but you are not expecting the trend to go to the infinite and to the moon and beyond. You are expecting the trend to change direction when it hits the UFOs, because the trend is simply natural price movement going from UFO to UFO in a larger time frame. So you gotta be respectful of that fact. Let me take a look at your questions, guys, because hopefully this clarified. And by the way, in the chat box, it would be great if you could let me know if this is clarifying. John said, many people with an engineering background are a little bit alien, including me. I got that background too, John. So I guess, I'm the same. John said, a joke I recently heard is that in the UK, you have met an extrovert engineer when he looks at your shoes, when he speaks to you instead of his own. Got it. Fernando, good question as well here with Fernando. How many time frames above and below should we also check for UFOs in the way of the mechanical trend? Okay. I would suggest maximum 3 time frames. Okay. In most of the cases, 1 is enough, to be honest. My experience tells me that in most of the cases, looking at many time frames or only 1, if you know what you're looking for, is not going to make a major difference. For example, if in this time frame, in the 60, right? Remember, I concluded after looking at the 60 and then moving to the 240, where I saw the UFO further away, and then moving to the daily, where then I saw the UFO closer, and that's how I adjusted my blue line to 49.26, correct? By doing that, that's how I concluded that the trend is up, but it has room to keep going all the way to 49.26, but probably not beyond, at least not anytime soon. But if you think about it, if I only looked at 1 time frame, I would have concluded that the trend has room to go all the way to 49.57, which is kind of the same. Does that make sense? So you could get a little more perfectionist. Nothing wrong with that. I would say up to 3 time frames makes sense. Okay, it doesn't take much time to switch it to 3 time frames, and you are only looking for 1 thing. Okay, so you look at that 1 thing in 3 time frame, and that's it. So not a bad thing to be done. Now, careful with the perfectionist approach. That some of you may have the normal tendency to do that, where you are basically planning those trades by looking at way too many time frames, and then you're just spending a lot of time and you know getting even conflicting information, and now you don't know what to do. And remember, this is not about looking for a sure thing, it's about looking for something with probabilities and accepting the fact that you will have to lose in some of your trades, isn't it? That's what differentiates a good trader versus a trader who is still in learning stages. A good trader has understood that to make money, you have to accept you will be losing money, where a trader who is still in learning stages always wants to profit, never wants to lose. It's just because that trader hasn't had experience enough in the marketplace to understand that simple fact, which is easy to be said. But if you have a background, like, for example, John was talking about engineers, my background is engineers, so I know well. Sometimes we fall into being too perfectionist, and therefore the problem of being perfectionist is that we basically don't want to get those losses because we are perfectionists. We want to kind of like, overpower the market or something like that. I don't know how to call it. So, we got to trade in a way that is a little more relaxed, stacking odds in our favor. And this is how you will excel, okay? Very good. Simone, sorry, which kind of moving average is exponential? The one I'm using is just a simple average. And by the way, it doesn't matter, okay? What matters is that whatever tool you use, that's the one you use and you don't change it. So you can act mechanically. Let me tell you, there is no magic moving average. There is no magic anything that will make all your trades to profit or all your trades to lose. Is that making sense? So it's all about a matter of probabilities. And if the trend is up, the 20 simple will show it to you. The 20 exponential will also show it to you. The MACD will show it to you. The ADX will show it to you. And maybe sometimes, like 10 candles per chart, different indicators will behave slightly different, but the majority of candles, you'll get the same information, no matter the technique. So the reason why I proposed an average is so you don't think. Is that making sense? Again, trying to remove the human component, okay, and then adding the UFOs to add reality, or realism, I should say, to the trend identification, because many people, just because the trend is up, now they perceive it's going to the moon, and let's face it, if I remove the UFOs, notice the impression the chart will give you, isn't it? If you are not trained, if you don't have the UFOs on your screen, how do you feel about this? You feel it's going to the moon, right? Well, if you add the UFOs, suddenly now you're thinking, oh, caution, it's going to be difficult to go through this, right? So next thing you know, you are not thinking about the trend, you are thinking about the trend as a consequence, and therefore you could rely on the trend, but just because there is room for the trend to continue, not only because it's a trend. Is everybody with me on that? Okay, if it would be great if you could share with me how you're feeling about what I just shared with you guys. That way, I can also go ahead and talk about the opposite, which is, okay, so what if we were to plan on a trade against the trend? Okay, and by the way, there is one of you said that there is a little bit of sound problems. Guys, could you please confirm as well on the chat box with a quick yes or no, if maybe instead of yes or no, good or bad would be better? We should be fine. Everything looks good on my side, but yeah, still fine-tuning technology, so it would be good to know. Cool. Good. John, unfortunately, many educators and many here in London will tell you different. Someone is always trying to sell you magic. Magic is us, isn't it, guys? We act professionally, like business people, like professional traders, of course, with the proper tools, and that's it. But what's the magic? The magic is not the tool, it's us, okay? I mean, hopefully you guys are joining us here in those sessions because you appreciate the UFOs. And as a tool, it's quite powerful. But at the same time, if you use the UFOs and you're not going to be disciplined, you're going to get in trouble, isn't it? So the UFOs is just a tool to help you. But then the key is us, okay? The people clicking the button, okay? So that's why we're spending time not only talking about the UFOs, but also the sharpening, okay? Good. Perfect. Thank you so much, guys. Good. So now, what if, okay, what if okay, yeah, Orlando, I see your comment. I'm not sure what's happening on your side. It seems that sound is fine. So unfortunately, I need to continue with the session, Orlando. Sorry for that. We'll catch up later. So now, what if instead of planning to trade in the direction of the trend, you were simply trend agnostic and you don't care about the trend, or if you want to take it a step forward, you were to want to trade in the opposite direction of the trend, okay? Because there is a major benefit of trading in the opposite direction of the trend. For example, if you caught this low, which obviously, this would have had you buy, as the trend is going down, but you would be buying. So you would be buying against the trend, like most people would say in the industry. The beauty of doing that is that if you're right on your timing, you are catching the whole new trend developing. Okay, and so you have the best perfect entry point. Now here's the danger of doing that. Okay, here's the danger of doing that. The danger of doing that is that when a market is trending, and I said that earlier, so I want to refresh myself, it is because most people are buying and few people are selling, or most people are selling and few people are buying. And that market condition may be caused by something major, maybe something global, some major economic event. I don't know, whatever. So what's the issue with that? Well, the issue with that is that you may have those UFOs, which are made of on-field orders waiting to get filled. But now the institutions cancel the on-field orders because of that new, let's say, global market condition. The institutions now cancel the orders, and now that would have you buy in a green UFO, for example, and then the trend was down, you expected it to reverse and become an uptrend, but it didn't happen, it stopped you out. Why? Because the institutions canceled their on-field orders, and therefore, the UFO didn't work the way you expected it to work. So, when you rely on the trend, it gives you a little bit of an extra odds of success as long as there is still room for the trend to keep expanding, as we discussed before. Why? Because you have the proof that shows you that institutions are buying more than selling, or institutions are selling more than buying. Okay? For a trend to develop, it needs more buying than selling, or more selling than buying. And if a market is trending, you have the visual proof that this is the case. So therefore, it gives you a little bit of extra odds of success, as long as there is still room for the trend to keep evolving. Now, if we're to buy in a UFO, expecting the trend to reverse, for example, if you were to sell short in this UFO, expecting the trend to reverse, well, in one hand, it is likely to happen. But the question is, why is the market trending so strongly? Is it because institutions are removing the sell on field orders? And if institutions are removing the sell on field orders, then that green UFO will fail. So what would be the safe way to catch a turning point and anticipate a turning point? What would be the right way to do it? Well, the right way to do it would be to be a little reactive. So here's what you will want to do. So let me remove everything on the chart about the UFOs. Okay, for example, what was the biggest threat we saw in crude oil when we looked at the 60 minutes, the 240, and the daily time frame? What was the biggest threat that we saw? Okay, interesting. Just for whatever reason, here we go. So what was the biggest threat? The biggest threat was this red UFO. That was the biggest threat. So what would you want to do? Well, what you would want to do is you would want to wait for the market to come within those premises, and then in a lower time frame to show you a red UFO inside of this higher time frame red UFO. In other words, I am looking for a proof, a supporting fact that proves to me that the on-field orders I expected that will bring the trend down and develop a new trend, I want to see a proof that those expected on-field orders are still there. And therefore, you will need to be a little reactive. Let's go back in time to see if we find an example of that. So if I go back to 11:23, so I will show you an example of that in the past, and then we'll look for an example in the present. Okay, so we'll plan a trade. So for example, what do we have here? I'm not sure if, okay. With crude oil it's not going to be a good example for educational purposes. So let me do this. Oh, you know what? We can use this one, and then because I want to give you a real example, but also I would like to give you the first example to be easy to understand. So, for example, in the daily time frame of crude oil, let's do the same thing we did before. So, if I switch to the 60-minute time frame and I look at the moving average, and I ask you all, what's the trend? Everybody would say the trend is down. Okay, but remember, that's not relevant. This is just saying what already happened. What's relevant is what's likely to happen with that trend. Does the trend has room to continue expanding? Yes or no? That's the question, right? So I will want to look at my 4-hour time frame to see if I got green UFOs. I have none. I would like to look at the daily time frame, and if I look at the daily time frame, I can see that I got green UFOs starting at 48.70, right? So if I plan on joining the trend using the 60 minutes or the 5 minutes or whatever, I now know I have room for the trend to keep expanding all the way to the blue line, which is 48.70. And again, this is the same thing I discussed before. Earlier was an uptrend, now it's a downtrend. So that's it. I will not expand on this example of a downtrend because it's the same thing as before. What I want to discuss now is, what if it gets to 48.70? Well, if it gets to 48.70, I would be expecting the trend to reverse. Why? Because that's where I got the on-field orders to buy the green UFO. But again, I could do two things. Just let me draw two lines and fast forward in time to see what happened. Okay, so between 48.70 and 46.32, buy. So let's fast forward in time. One more week. Okay, well, it didn't get there. Let's fast forward in time. One more week. It didn't get there. Let's fast forward in time. One more week. Didn't get there. Let's fast forward in time. One more week. December 21st. Got there. But what happened? It went through. Okay, and that's a great example. That's exactly what I was talking about before. So again, here's the power of the trend. If a market is trending very, very strongly, it's because something may be happening globally. If something is happening globally, it means there is more selling than buying. But if there is more selling than buying, it is happening because buy orders are being canceled. So in other words, even though we had green UFOs on the chart, those green UFOs, those green on-field orders, buy on-field orders, may have been canceled. So if I had taken the trade here, expecting a trend reversal, I would have been stopped out. Okay? So what would be the safe way to do that? Well, take a look. That was 1218. So on 1218, that's why the trend is relevant, even though not by itself. Okay? You always need to measure how much more room there is for the trend to continue expanding, as we said before. But here's why the trend is important too, because if you were to take this trade blindly, for example, here's the 60-minute time frame, is that when price enter the zone between my two blue lines, which is where I had two green UFOs, that I never had anything green produced. Okay, I didn't have a green UFO produced. So I never got the proof I was talking about. When I expect a trend reversal, I just don't want to jump in front of the train. I want to make sure that I got some supporting facts that shows me that the on-field orders I was expecting have not been removed. Why? Because there is a reason for the trend, which is, in this case, a downtrend. And for a downtrend, the reason is less buy orders, more sell orders. And therefore, you got green UFOs. Sorry, you got red UFOs, but no green. Okay? So in this case, you would be planning to catch a trend in the opposite direction, but you didn't. Why? Because you had never been given what you needed. And unfortunately, with crude oil, there's nothing else. Okay? So I'll have to switch market to show you how to do this properly. Earlier I was looking at, what was it? Visa, I believe, right? Yes. So with Visa, okay, so for example, right now, or when was, I was using the monthly time frame, right? Earlier. Yes. So earlier, remember when I was looking at October 31st, 08? Do you guys remember this picture from earlier? Right? Where we said, hey, this market is likely to develop a trend to the downside if it ever comes here. And this market is likely to develop a trend to the upside if it ever comes here. Remember, the trend is not relevant by itself. It's the natural movement between green to red and red to green. So now, if I was to wait, instead of bet on the trend just because it's the trend, I was to wait for evidence that this is the case in a 60-minute time frame. So this is what I would do. Okay, price is in the middle. I know if it gets down there, I'm going to be planning on buying and betting on a trend to the upside. If it comes here, I'm going to be planning on selling short and betting on a trend to the downside. Why? Because I got a red UFO above and a green UFO below, right? So I would expect the trend to move in both directions, but I'm only going to do it if I have evidence. So what would you do? Well, wait for price to enter that zone. So for example, one more day, November 1st. So notice the trend is up, right? And you know the trend is likely to reverse when it gets there, but you need proof. So now it's going down, hasn't got into that region yet. I'm getting now to November 5, still doing its thing. What about November 7? Here we go. So now price entered above the red line, and I am expecting the trend to reverse. I could actually use those red UFOs to short, actually. Okay, but again, that would imply that I am expecting the on-field orders to still be there. And the fact is that because this is an uptrend, some of those sell on-field orders may be removed. Because for an uptrend to develop, you need more buying than selling, and therefore many sell orders are canceled. So instead of trying to catch a trade in the opposite direction of the trend by guessing the trend is gonna reverse, you could ignore those UFOs and just wait until a new UFO forms. Okay? Notice keeps doing its thing. We got no green UFO form on that day. Now is November 9. Still no green UFO form that day, because the one here was formed before, isn't it? So still no green UFO form that day. Now I got a green UFO. You see that? So what could you do? Now you could start betting on the downtrend, because now you have a proof of evidence that tells you that the on-field orders you were expecting, I mean, if I go back to the monthly time frame, right, and I zoom in, you can see in this last candle, price went in and then went down, and that's why we have the wick. In the 60-minute time frame, you can actually see the proof of what we were looking for, which is there are on-field orders above the red line, and therefore the normal expectation, okay, which again, not every trade is going to work, and in this case, I have no idea what's going to happen, but the normal expectation would be that when the market comes to this price region, as long as you have profit margin, etc., so you know, you will now have an opportunity to catch a trade in the opposite direction. Okay, so it's the trend now is developing to the downside. Let's see if it retraces enough until it gets to a red UFO. Okay, that would be on the 16th, November 16. Okay, well, it's doing its thing, giving us a little bit of a hard time to get to this red one. Again, but you get my point. Now the trend is developing to the downside. Okay, and sometimes you know, the trend reversals. I mean, let me give you an extreme example here. If you look at the trend reversals, okay, give me a sec. It's taking a little bit of time to load. I just want to show you the turning point in 2009, which is a very, very strong trend reversal example, like super dramatic one. I'm not sure why it's taking so long. I guess it's okay now. So if you look at this trend reversal, let me cancel the UFOs here. Yeah, that trend reversal here in 2009, you know, it just went down and up, like it's a V-shaped type of formation. If the market was to reverse the trend in this fashion, you're gonna miss it. That's what was happening to me in Visa a minute ago. Okay, it went up, it went down. In the 60-minute time frame is showing you all of that. But the fact is that if you are still looking to catch this trade, using that UFO, you know, you're still waiting for this to happen. It didn't happen. It went down. Sorry, 60 minutes, not 6. That one here. You're still waiting. So it's kind of reversing like an inverted V here. It's a very, very aggressive type of turning point. A trend reversal sometimes will happen like that. A trend reversal sometimes will have, you know, multiple tests of this kind of high before it fully reverses. So if the market is nice enough to give you that, well, guess what? Then you will be able to catch the trend reversal. If not, you will not. But my recommendation, based on what we're discussing, is that you don't want to bet on a trend reversal just because you have a UFO, because there is a reason for the trend to be there in the first place, which may be a fundamental reason, a global reason that implies orders being canceled. That's where the trend give us some extra help, some extra odds in our favor, some extra probabilities. Okay, but the problem is that some people take it too far, and next thing you know, the only thing they do in trading is follow the trend, even if there is no room for the trend to keep expanding. So it's all about probabilities, and you need to be respectful to the probabilities that the trend provide, but you also need to be respectful to the probabilities that the UFOs provide, knowing that both the trend may fail or work, and both the UFOs may fail or work. And therefore, if you have the UFOs working in conjunction with the trend, you can just take trades the way we did plan with crude oil a few minutes ago, where if you were to take trades in the opposite direction of the trend, then it would be more prudent to wait for the market to come into the region of the UFO. In this case, it was above 142.36, and then wait after the entrance, wait for these new UFOs to form, and have this proof, that piece of evidence that proves to you that the on-field orders you were expecting have not been removed, and therefore it's okay to take the trade. So guys, that was a little bit of an intense explanation here. Hopefully it's been useful. It would be great. I have a few questions I would like to read now, but in the meantime, I would really need from you, everybody, please to give me a little bit of feedback on how did it go? Did this help you? Did I help you? Did I confuse you more? I would like to know that, and that would be important. Again, our intention is to help. Okay, so hopefully we accomplish that goal. If it's not the case, please let us know. Okay, Fernando. Okay, I'm showing your question here. Can you expand this concept of enhancing odds by checking for opposite lower time frame UFOs to trading with the trend as well? Yes, because how do I put it? So now you are opening a different conversation here, okay? Which we'll need to postpone for another day, but at least I would like to give you at least a partial answer, because it's very important. You have a good question here, big one. So basically, we're talking about the relevance or the importance of timeframes. Kind of like between the lines, I read within your question, it is implied that you are asking, so what's more relevant, the larger timeframes or the lower timeframes? And really the answer, again, it's about probabilities. This is what we need to understand as traders. Because sometimes you will not have a lower time frame green UFO, but you will have a larger time frame green UFO. And when the market comes to that UFO, it reverses and go back up. So what was responsible for this new uptrend? It was the larger time frame green UFO. But sometimes you will not have a larger time frame green UFO, and you will have a larger time frame, and you will have a lower time frame green UFO. Like, for example, crude oil right now, right? And what is going to make the trend to go up? Well, then it's going to be the lower time frame green UFO. So bottom line, we got to be respectful of all those UFOs, because we know when you see the UFOs on your screen, you know you have on-field orders. But what we don't know, because it's impossible to know, is how many on-field orders are waiting to get filled. Sometimes a tiny UFO has many on-field orders waiting to get filled, and sometimes a big UFO has few orders waiting to get filled. Sometimes a big UFO has many orders waiting to get filled, and a small UFO has a few orders waiting to get filled. So you never know. So what's the safe way to approach this? Well, take a few time frames. Earlier I was proposing 3, and plan your trades accordingly, and be respectful of all the UFOs that you have around you. Okay, that would be the safe way on how to approach it. But certainly we can talk about multiple time frames another day and get deeper into this concept. Good. Yeah, thank you so much, Debbie. Nice to see you here, by the way. Yeah, all good, guys. I'm reading your questions here. Yeah. Well, your questions basically, you guys are basically acknowledging that it's all good. Mark, I was missing your question. Sorry for that. Very good. I'm just reading you. Okay. Yeah. So basically, all your questions I kind of missed you and Peter as well, but even though I kind of missed your questions, I indirectly answer your questions because other traders in the room had similar questions. So I think we're good. I think we're good. Now, before we go, I would like to have a conversation about calibration. Okay, and I will let you continue with your Sunday weekend, some weekend Sunday, and but we need to talk about calibration. And also, Peter was asking about. Let me get your question here, Peter. So Peter was also asking about trading session hours. Okay, trading session hours. So, and Mark is going to listen to the trend reversal power. Very good. Yeah. Yeah. So basically, let me summarize that before I get into calibration and Peter's question. So, Mark, if you go with the trend, by definition, it's fair to say you have more odds in your favor. But, and that's a big if, only if there is room for the trend to keep. Okay, so if that's the case, you can rely on your UFOs and your trend, and more often than not, you should be okay. Now, if you go against the trend, which is the trend reversal part, then you have less odds in your favor because the momentum in the marketplace is against you. The reason why the market is trending in a particular direction is because there is more buying than selling or more selling than buying. In other words, either buy orders are being canceled or sell orders are being canceled. That's how the market keeps progressing. So if you were to enter the market, it's fair to say that by default, you have a little less probabilities of success. Okay? So how do you fight that fact? Well, you need to look for a piece of evidence, a supporting fact that proves to you that the unfilled orders you were expecting are still there. And how do you do that? Well, you saw me use a monthly time frame, let price come in, and then show us 60-minute time frame red UFOs. And that 60-minute time frame red UFO is the proof that tells me that the unfilled orders I expected in the monthly time frame are still there. And therefore now I am okay entering this trade because I have a piece of evidence supporting that those orders have not been canceled, and therefore a new trade is going to develop after I enter. Why? Because trend is simply the consequence of the natural movement of price going from a red UFO onto a green UFO or vice versa, assuming the unfilled orders are still waiting to get filled. Okay, and when you trade against the trend, you gotta wait, or you better wait, or you should wait, or it's higher probability to wait for that piece of evidence. Okay, so I kind of summarize with words what I demonstrated before, so you can always go back and watch the recording that will be posted a few minutes after the session. Okay, David, Jose, this did help me as I have learned trading on unfilled orders. Very good. Thank you so much for sharing, David. So Peter was asking as well about can I use the UFOs with trading session hours? Okay, so you can apply the UFOs anytime, and this is related to calibration. So look, to do calibration, probably all of you know that no matter the market you trade, what you would do is you would access the inputs, you would activate show UFO stats to true, right? And when you click OK, now the tool is giving you a specific figure, okay, on how good or badly that UFO app is doing for you. Now, for you to know if it's worth it or not, to only use the regular trading hours or to also use the extended trading hours, in other words, pre-market and post-market, or Asian time zone, European time zone versus US time zone, it's very simple. You just come in here, okay, or you just double click on your candles or right click format symbol, and then in properties you can select a different session. So you can regular session, and then you can select other types of sessions, right? The ones below, US stock with post-market, US stock with pre-market, US stock with pre-market, all of those come by default trade session. So you can access here. I have my icon here on the top as well, which makes it easier for me. So, I can click other sessions, select, for example, pre-market and post-market. And if I do that, it's adding 2 hours before the open, 4 hours after the close, which is what Visa does in the New York Stock Exchange. If I click OK, well, now it's giving me a result of 54%. So guess what? In the case of Visa, it is adding a little bit of extra probability to add pre-market and post-market. So in that case, you will want to use that setting. Other stocks may have less liquidity in pre-market and post-market, and maybe you don't get a benefit. For example, let's try, I don't know, NVIDIA. So if I try NVIDIA, 60-minute time frame, it's still pending data here. I need to wait a second. So PD for pending data. So it'll be showing up in just a sec. Here we go. So you have 52% with pre and post market. If you only show the regular session, instead of 52, you have 49. So in the case, well, it's still loading data as well, so I need to wait a little bit. The number will change a little bit, but it's looking like pre-market and post-market for NVIDIA as well with help. Okay, it's not always the case. You will find stocks that have very relevant trading in pre-market and post-market, and therefore it helps. You will also find stocks that also have very little or very relevant data in pre-market or post-market. Okay, and therefore it may not help. So you will need to apply it, and the beauty is that with the UFOs you can actually measure it, so you know how you want to use it. Okay, so in this case 50%, which is less than 52. So pre-market and post-market does a better job in this case. Okay, cool. Now calibration. So let's talk about it, and then we'll go enjoy the remaining part of our Sunday. So calibration. Okay, calibration is a process, and I'm going to do that. Let's use the S&P, for example. Since it's a fully 24-hour market, I think it would be a better example to do the calibration. So now calibration, you can see here by default, which is, by the way, when I use the app for you guys in those sessions, I'm not calibrating. I'm using 0.5. Why? Because every one of you may use. Therefore, it's impossible for me to use the same parameter as all of you use. So I'm just going for 0.5 because it's in between 0 and 1. It's not wrong to use 0.5, even though other settings may be better. But 0.5 is what I'm going to be using in the sessions, just because everybody uses different setting. Okay, so just keep that in mind. But and that's the one that comes by default as well, 0.5. Okay, so if you have your 0.5 and you add true for show UFO stats, click OK, and now it's going to show you 60.10. So first of all, what does that mean? This means that the probability of having price travel from green to red or red to green is 60%. Okay, and this is certainly relevant, but at the same time, this does not measure how often you will profit or how much money you will make. Why? Because first of all, for you to get 60% winners, you will need to take all the trades available on this chart, and that's probably too much. Second, sometimes the UFOs are too close from each other or very far from each other. So in other words, some of those 60% winning trades made humongous profits. Some of those 60% profitable trades made very small profits because the rival UFO was very close by. Remember, what those percentages represent is the probability of having price bounce from a green UFO and reach the rival red UFO, or the probability in this market to hit a red UFO and bounce and travel in the opposite direction from the red UFO until it reaches the rival green UFO. So a simpler way to say that is that this number measures the amount of times price hit green and hit red, or hit red and then hit green, without going through the UFO. Okay, so it's a good measurement because somehow it tells you how well or poorly the market you are about to trade, reacts to unfilled orders. It's a great measurement, but we can make it better. Okay, we can make it better because by playing with the calibration, you are basically inputting different ways you are say on how the algo does the job to identify the unfilled orders. I mean, the algo behind the scenes is doing many things. Some of the things can be seen by the human eye. Some of the things, it's beyond that. It's all programmed behind the scenes, so it's pretty cool. But by changing the calibration, you basically impact certain sensitivities to what the algo does. And basically, let me go for an extreme. If I go for something like 0.2, what would normally end up happening is that your UFOs become narrower. You see, that little guy is narrower. If I was to go for something bigger, let's go for 0.8, for example, what would normally happen is that, that one stayed very narrow too, but many, many times you will have UFOs that become very wide UFOs. So you impact how the algo identify those unfilled orders and the sensitivity to them and so on. And basically, in most cases, the higher the calibration setting figure that you use, ranging from 0 to 1, in this case 0.8, then the wider your UFOs will be, where the smaller the figure, then the narrower your UFOs will be. And that will have a direct impact in the probabilities. Why? Because think about it. If your UFOs are wide, then it means, assuming that your entry is the UFO, your stop is the wide zone, meaning beyond the UFO, and your target is the rival UFO, in this case, this red one here. If you make the UFOs wider, what you are really doing is that you are pushing your stop further away, right? You are pushing your stop further away. If you push your stop further away, you have a mathematical lower probability of being stopped out. And also because the rival is wider, right? So if I do this, if I make this one wider, I don't know if I can do it like that. Yeah, if I make this one wider and this one wider, so what am I doing? I am making the probability of being stopped out to be less because there is more room for price to travel against me to be stopped out. And I am also making the probability of reaching the rival UFO higher. Why? Because since they are both wider, the distance between them is less. Where if I make them narrower, well then I make the probability of being stopped out more because the distance to travel from my entry is less. So I have a higher probability of being stopped out. And also the probability of reaching my target, which is the rival UFO, is less because the distance to travel is a larger distance. And, easier to catch it's easier to catch a 1% move instead of a 5% move, right? So just purely mathematics here. Is that making sense? So in other words, when you input calibration settings, just keep that in mind, that as a rule of thumb, the higher the number. So if I do 0.8, it's going to give me 59% probability. Or if I look at 0.2, 9.54% probability is going to give me 53, right? So as a rule of thumb, the lower the figure, the lesser the probability, the higher the figure, the greater the probability because of what I just explained, because of the size of the UFOs and so on. But at the same time, the algo behind the scenes is doing many things. So it's way more complex than that. So what I would recommend you is to, keeping that in mind, to play with the figures and maybe experiment, okay, what if I do 0.4? 55, okay. What if I do 0.5? It's 60. What if I do 0.6? 64. What if I do 0.7? It's 66. What if I do 0.8? It's 59. So based on what I just did, it seems that 0.7 was a better setting. Now I can also try, what about 0.65, 0.66, 0.67, 0.71, 0.72? So you could get, say now you concluded 0.7 is the number you want, right? Well, now the second thing you want to do in this calibration process is to make sure that the statistical results you got are consistent through time. So what you don't want to see is that in this case, I got 1,597 candles loaded on my chart. By the way, I'm not looking at the current date, January 6th. So January 6th, we have 59%. Okay. So what you don't want to do is that you look at the settings, right? On January 6th, and it gives you 59%. And if I go back, let's say 3 months, or even 1 month, I go back 1 month in time, which is December 18. Now this number is very different. So 59 and 67 and 64, you know, it's 5% different. I'll take that. Okay, 5%, even 10%. But let's say if I used January, I got 59, and if I use December, I got 45, right? I would be like, oh, wait a minute, what's going on there? Does that make sense? There is a major difference in performance. So you will want to go back in time. For example, now I go back to November, and I'm loading 1,500 candles starting November and going backwards. And now November tells me 67. Okay, so I got 50, was it 64, 67 now, right? What if I go back to October? 65. What if I go back to September? 66. By the way, you may have noticed as well, December was giving, the January was giving the worst result, and it's also because it's through the holidays in December, right? There is less trading, there is less on-field orders. So the measurements that you find need to make sense, so you can rely on the tool. Is that making sense? Give me a second here, guys. I got a little problem with my keyboard. For a second, I lost sync with the keyboard. Just give me a sec. Okay, back to normal. So if I look at August, right, 66. If I go back in time and I look at July, it's giving me 62. So remain constant. You tell me, okay, I want to be even more perfectionist. What if you did that 2 years ago? You go back to 2016, right? This is what you should do before you trade any market, so you know what to expect. Is that making sense? You don't want to trade and hope it's going to be okay. You want to trade in a way where you have measured what to expect before you trade. So what if I loaded data? Again, this is going to take a little bit of time because it needs to load data. Yeah, it's loading data here. So we're going to have to wait. Here we go. I got it. So now look at that. July 2016 now, 66%. What if you are looking at August 16? It's going to be there in just a sec. 65%, almost 66. So you see, that I would be comfortable trading a calibration like that, and again, I'm just sharing. Of course, you all know that the responsibility of calibration is on your side, and is personal preference, and it's about your trading plan, and etc. But basically, if you pick a calibration setting, okay, I'm going to go back to 0.5 because, as I told you, is what I'm going to do, which normally is going to give a little bit of a lesser number. So if you look at a calibration setting that gives you results that are satisfactory to you, and you see those results to be consistent through time, well, now you know you have something that is reliable in your hands. Then it's all about you having a proper business plan, trading plan, rules, follow rules with discipline, etc., and then you should be okay. And this also should be done when you start trading a market that you have never traded before. So let's say you tell me, look, I've been trading for a year the S&P futures, and now someone told me crude oil is cool, but I never traded crude oil. So what should I expect? Well, if you know 60 something or anywhere between 55 to 65 is what you should expect, and now you click, and the moment you load crude oil, let's say you get 30%, then you should run away from crude oil. That would be a market not to trade. It's taking a while because I'm still loading those dates from 2016, so TradeStation has to download all of this. Here we go. So now let's take a look. Now you look at crude oil in 63, okay? And now, what if you look at this in the current date, right? And you keep looking at this in different periods in the past. Okay. So again, if I had 45, 35, it would tell you that probably is a bad idea. But look at that again, 56. Okay, again, going through the holidays, the S&P also was giving a little bit of a lesser figure. You see, all of this is telling you that you have a tool that is doing something consistent, that is doing something that is acting in the background the same way all the time. And that's going to produce consistency in your results. Okay, so what do you do on top of that? Yeah, you add anything else you want. Today we talked about the trend. Just add a few rules for how you plan for trend identification and trade based on the trend and UFOs. Or, if you like better to catch trades in the opposite direction of the trend, well, put a couple of rules around it. Wait for price to get into the UFO, and when you have a piece of evidence supporting that UFO is still working in a lower time frame, then you take that trade and you catch the new trend before it reverses. Does that make sense? Anything is doable, okay? But you need plans, you need rules, you need your UFOs, and your UFOs need to be well calibrated. And that's quite personal because some of you may want to take more trades, some of you may want to take less trades. Things also impact not only the performance, but also the amount of UFOs. So if I go to 0.7, right now we have 1, 2, 3, 4. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 UFOs that are visible. If I do 0.7, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So with a higher calibration setting, you also have less trades. Some of you may want to trade more. Some of you may want to trade less, right? Some of you may do more often. Some of you may not be okay being stopped out so often. So, this is going to be personal for you guys, okay? But now hopefully you understand the rationale behind it. And therefore, we're going to conclude our session today. We spent almost 2 hours today sharpening, okay? So it's been great fun for me. Hopefully you had a good time as well and learn a lot. But as I was saying, I think it's now time to go and continue enjoying the rest of the Sunday. Okay, guys. So we'll see you next day. Next day, to be precise, let me make no mistake. Next day is going to be, I believe it's going to be Wednesday and Thursday next week. Do short-term and long-term. Here we go. So yeah, January 9, January 10, Wednesday and Thursday next week, 9 a.m. US Eastern Time. So see you then, guys. It's been a pleasure. Enjoy the rest of the day, guys, and see you next week. And guys, keep sending your emails, suggestion questions, and so on. Some of you keep asking us about how to subscribe for the UFOs in case you started late. Here's how you do it. And obviously, we welcome very much as well if you guys have trader friends that don't know about the UFOs, and you can introduce them to the get-together sessions that we do. That probably would be useful to your trader friends, and obviously to the UFOs potentially as well, if they choose to. Anyway, guys, take care. See you soon. Bye-bye.